Welcome to The Explainer. Now, if you think back just a couple of years ago, to the height of the pandemic, buying a car was defined by basically one thing: absolute scarcity. I mean, dealership lots were just ghost towns, right? Buyers were locked in these crazy bidding wars and paying thousands of dollars over the sticker price. Well, that was just the cost of doing business. But today, oh man, we are looking at a massive, unprecedented whiplash. We're diving into a major crisis that is hitting some of the world's largest automakers right now. They're suddenly struggling with these overwhelming, massive stockpiles of cars that buyers literally just refuse to buy.
And honestly, industry insiders are actively warning about potential automaker collapses. Dealership lots are rapidly turning into incredibly expensive parking lots for unwanted vehicles, and the financial pressure is just mounting by the day. And when we say automaker collapse, that's not just a dramatic buzzword. We're talking shuttered factories, massive layoffs, and entire legacy brands potentially being wiped off the map if they can't figure out how to move this metal. So we're going to use the latest CarEdge dealer inventory data to find out exactly why this is happening. We'll pull back the curtain, reveal which brands have made some pretty catastrophic miscalculations, and figure out why consumers have completely stopped buying what they're selling.
To really wrap your head around the sheer scale of this problem, just look at the Nissan Z. 350 days. That is the current market day supply for this specific vehicle. Think about that. It takes almost a full calendar year to sell just one single car. Right now, there are over 2,000 of these units just collecting dust nationwide. And in the auto industry, having a car sit for that long is an absolute disaster. It suffers from what the industry literally calls lot rot. The batteries die, the tires develop flat spots, and the dealer is just bleeding money every single day paying interest on the floor plan loan they took out to hold the thing. A 350-day supply isn't just a slow sales month, it is a blaring siren telling us we've got a major product failure.
So, to make sense of this crisis, we're going to break things down into 4 key areas. Number 1, the EV market correction. Number 2, overpriced luxury. Number 3, brand turmoil. And finally, number 4, what this means for you. Let's get right into it.
Starting off with Section 1, the EV market correction.
Let's take a look at the Hyundai Ioniq 6. This is an electric sedan with a very polarizing, ultra-futuristic look, and it carries a pretty heavy $46,000 price tag. You see, automakers leaned incredibly hard into these sci-fi aesthetics, basically assuming early EV adopters wanted to look like they were driving a spaceship. But here's the reality check. As EVs try to cross over into the mainstream market, everyday buyers really just want practical, spacious utility. The Ioniq 6 is this low-slung sedan that's seriously struggling to find its footing against far more spacious crossover SUVs. And this total mismatch in what consumers actually want, it's resulted in a 263-day supply, with close to 6,000 unsold units just sitting at dealerships, completely ignored by families who, frankly, need space for groceries and kids, not just a futuristic silhouette.
Now, the Fiat 500e. That takes the EV struggle to a whole new level of unforced errors. I mean, it's incredibly cramped, it costs $34,500, and it offers a maximum of just 141 miles of range. And let's be real, in the real world, once you factor in highway speeds or cold weather, that range drops significantly. That makes severe range anxiety an everyday reality for the owner. When you pan out and look at the wider market, competitors are offering twice the utility, twice the space, and twice the range for practically the exact same price. Seriously, who is going to finance a $34,500 car that can barely handle a longer round-trip commute? It makes the Fiat practically unsellable, pushing its market supply to 288 days, all while its parent company, Stellantis, is facing a terrifying period of free-falling sales across the board.
Moving right along to Section 2. Overpriced luxury and underwhelming value. When you compare these two massive SUVs, you really get to see the sheer arrogance of pandemic-era pricing hitting a solid brick wall. On one hand, we've got the $105,000 Lincoln Navigator. Sure, it's packed with 440 horsepower and literal massage seats, but right beside it is the absolutely jaw-dropping $112,500 Jeep Grand Wagoneer. Yeah, you heard that correctly, over $112,000 for a Jeep. During the vehicle shortage, automakers pushed luxury pricing to the absolute limit. They assumed buyers would just absorb infinite price hikes. Well, today, that hubris is failing entirely. Buyers are looking at these exorbitant price tags, realizing they only get 16 miles per gallon and figuring out they can easily find better refinement and dependability somewhere else. The Navigator alone has 8,700 units just languishing on lots across the country.
And for the Audi Q8, the problem is entirely self-inflicted. It's accidental brand cannibalization at its finest. Product lineups at these major automakers have gotten incredibly bloated, so much so that they're literally competing against themselves. For $15,000 less than the Q8, a buyer can just walk a few feet across the exact same dealership lot and opt for its sibling, the Q7. And get this, the cheaper Q7 actually offers better interior space, a highly practical third row of seats, and superior fuel economy. So why on earth would anyone pay a $15,000 premium for less space and less utility just to get a slightly sportier roofline? Consumers are smart, they've figured this out, completely undercutting the Q8 and perfectly explaining its 270 days of stagnant, immovable market supply.
Which brings us to Section 3, brand turmoil and fading icons.
To introduce the UK-manufactured, Indian-owned Land Rover Discovery Sport, dropping in this classic Winston Churchill quote actually feels incredibly appropriate. Because frankly, the news here is exceptionally grim, and there's just no way to sugarcoat what a failure this vehicle has become on the open market.
Consumer Reports gave the Discovery Sport a truly dismal predicted reliability score of 30 out of 100. The main culprits behind that embarrassing grade? Well, plaguing issues with bad suspension setups and slow, unresponsive transmissions. Now, pair that terrible reliability reputation with a massive $55,000 price tag, a surprisingly weak four-cylinder engine, and a measly 19 miles per gallon. It is no wonder this thing is firmly stuck at a 269-day supply. Modern car buyers do their research, right? They know this vehicle is essentially just a pretty badge wrapped around a terrible long-term financial investment, so they're staying far, far away.
Let's pivot to the tragedy of the BMW 5 Series, which is really the story of a brand completely losing its identity. For decades, the 5 Series was the undisputed benchmark of the luxury sports sedan. It was the ultimate driving machine, celebrated all over the world for incredibly sharp handling and feeling so connected to the road. But lately, BMW has really softened the car's driving dynamics. They've made it feel bloated and disconnected. And at the exact same time, consumer tastes pivoted aggressively toward high-riding SUVs. So by abandoning the driving magic that made the sedan special in the first place, BMW basically handed its most loyal buyers over to its own X5 SUVs. That internal shift has left over 3,200 units of this $66,000 luxury sedan totally unsold.
When we look at the absolute worst offenders side by side, this incredibly damaging pattern emerges across the entire industry. Jeep represents total pricing hubris, pushing a mainstream brand way past the six-figure mark, leaving the Wagoneer sitting at 288 days while the company requires a major corporate overhaul just to avoid bankruptcy. Then you have BMW, representing a tragic loss of brand identity, failing to sell sedans because they forgot what made their sedans great, leaving them sitting at 305 days. And finally, the Nissan Z, which represents deep operational turmoil. It's suffering from leadership chaos, heavily delayed production, and a steep $55,000 price tag that entirely missed its target audience, topping the chart in an abysmal 350 days of supply. Now for the most important part. Section 4. What this means for you.
Look, we can distill this entire dealership inventory crisis down to three main reasons why buyers are just walking away: exorbitant price-to-value ratios, horrible dependability scores, and a heavy, undeniable cooling in electric vehicle demand. But here is why this deeply matters to you right now. If you're in the market for a vehicle, the power dynamic has completely shifted back to you, the buyer. The days of paying over sticker price and begging a dealer for an allocation, those are over. You now have massive leverage. Dealers are desperate to clear these lots before the interest on their loans eats their profit margins alive. And that means you have the power to demand aggressive discounts, better financing rates, and significantly more value for your hard-earned dollar.
So as these 8 models turn once bustling, highly profitable dealerships into absolute graveyards for unwanted cars, you really have to ask yourself about the future of the auto industry. Will these stubborn automakers finally swallow their pride and drastically slash prices to match our current economic reality? Or are we actually witnessing the permanent collapse of these legacy vehicles and historic nameplates? The market has spoken incredibly loudly with its wallet, and the next move is entirely up to the manufacturers. Thanks so much for joining me on this explainer, and definitely keep these incredible numbers in mind the next time you drive past the overflowing lots at your local dealership.